Hello friends, till now we have completed three chapters each for accountancy and for statistics, and in yesterday's lecture, as I have said, the things which are to be excluded from exercise 3.5 we have excluded and we have completed the chapter. After that we are going for the accountancy, that is chapter number 4. Now this chapter number 4 is the very basic concept of accounting. Till now, from chapter number 1, chapter number 2, chapter number 3, the things which we have learned will be used here in this chapter. So friends, if you are not aware about any of the previous topic, you can watch our videos on our own channel now, that is Uma Vidyalaya. Daily I am sending the videos on our channel itself, so you can go visit that channel Uma Vidyalaya whenever you are watching any video, whenever I am sending any link. Then if you are opening the video, at the down after the video it is given Uma Vidyalaya Nakhatram. You may open that channel, you may go to home, not but to videos. Now in that videos, if you are scrolling down, then you may find the videos as per our code. Daily our code is 1100. And as per the lecture number 11001, then 002, 003, till yesterday we have reached till 11042. So this is our 43rd lecture today, I think. So if you are unaware about any of the topic, then please refer the previous lectures so that it will be not difficult, it will be easy for you to learn this chapter. This chapter is the very base. Now friends, the concepts which we have used in the previous chapters are going to be used here. The main concept, if I am telling for chapter number 2, we were writing the two effects, first effect and second effect, that is debit effect and credit effect of transactions, are now shown in a journal book where it will be written with a format, with some rules and regulations. The transactions are recorded. Now it means that if you know the two effect of transaction, then only you can write the entry. So we cannot start this chapter directly. If any of you are unaware about this, then watch our previous lectures. If you are only just watching me now in the 4th chapter of accountancy, you may not get anything from this lecture. Okay, so now let us start. Page number 57, chapter number 4, journal. Okay, what is a journal book? In page number 57 it is written, a journal book is a fundamental book of double entry system. Fundamental means basic. It is such a basic fundamental book on the basis of which remaining books of accounts are prepared. So this is the base of all the transactions. If you want to record each and every transaction, then first you are recording in journal book. After that you can record in any other accounts or any other place you want. French word jour means day, from which the word journal is derived, meaning of which daily recording of business transactions. The business transactions that are occurring in our business in day to day, that are recorded in journal. English word journal is originally of Latin language. The meaning of it is note or a diary. So a journal book is known as the book of original entries. Underline that thing. First line of that last paragraph. Journal book is also known as book of original entries. It is such a book of accounts where all the accounting transactions are recorded in order of the date. We are recording all the transactions according to the date. It is also determined which account will be debited or which will be credited and with the amount. Transactions are first recorded here with brief explanation. Brief means short explanation. Page number 58. From rough book, on the basis of vouchers, accounting transactions are recorded in the journal book. Vouchers are maintained in the file in the order of date. After having entry in the journal book, different accounts are prepared and posting is made. On the basis of it, balances of all the accounts are ascertained and a trial balance is prepared. In rough book of transactions are not recorded in systematic manner. Thus, a rough book is not treated as component of books of accounts. Journal is the original fundamental first book of accounts. Okay, it is possible, and it is possible only that you were not getting anything what I was reading. Now I may explain it with some different concepts. See friends, whenever you were admitted in standard 1, we are talking about when you are admitted in standard 1 or in junior KG, then directly you did not start writing. First, oral teaching has been given to you. Then after that, slowly you are learning ABCD. After learning that ABCD, some words were given. After giving that words, they are giving simple cursive writing sentence. That cursive will be given and you have to just write on that. And after that, whenever you are admitted in first standard, these were all the works of junior and senior KG. Simple concepts will be given. After that, going on for second, third, fourth, fifth, sixth, seventh, eighth, ninth, 10th, you have completed your basic studies. So you were somewhat ready with the task. Now, after having chosen of commerce or arts or science, if you are choosing commerce, now you will learn only the things about commerce, means of science and arts you will ignore. In the same way, business transactions are also recorded in such a way. First, they are recorded very roughly, and vouchers of it are maintained according to the date in a file, small bills, voucher means small bills. After that, all the transactions are arranged and written in the journal book which we are learning. After that, we are preparing account. Account means a summary of a person's account which is affected or any other thing, regular transactions if it is occurring. After that, all the procedure of accounting is started, but here the words are given which you cannot understand now, but simple steps you can understand. Means here the chapter which are given are on the based on steps. After journal, we will learn in chapter number 5 subsidiary books. After that, we will learn a cash book. After that, we will learn journal proper. After that, ledger posting. After that, trial balance. And after that, a bank reconciliation statement. So part 1 is a journey to start the accounts and go till end. And again in part 2, we will learn the important concepts, the deep concepts. But part 1 is about the basic concepts. So be aware of what we are teaching. Don't consider standard 11th as roughly. You have heard from many of the people that 11th standard is nothing. If you are not focusing in standard 11th, easily you can pass 12th. This is the foolish thing which is spread in these years. And this thing you will understand only while coming in 12th standard. This is the problem of every year, that students consider 11th standard very leniently. They only enjoy in standard 11th. When they are coming in standard 12 and when the concepts of 11th are used and they don't know a single term of accounting or a single journal entry, at that time they will know the importance of 11th. There are some students also I am seeing, after passing 10th, sitting 1 year at home and after that giving exam of standard 12th. Nothing is impossible, I also know, you also know. But if there is standard 11, then it has some importance. So if any of you is telling that 11th standard is just a time pass, then let it be a time pass. I will not force anyone. But you will understand the importance in standard 12 and one day you will actually feel that. You cry or don't cry, that's not my problem. But people are recognizing the importance in standard 12 and in the college also. That if we have learned in standard 11th, then it would have very easy in standard 12th and college. Okay, new education policy is coming, that is a different thing. That will change accordingly, but be in present. So again I am telling friends, this is standard 11th and all the basic things you are getting from here. So don't waste this thing. Yes, now we were looking the journal. We have seen that it is the very fundamental or it is the very basic book of all the transactions which which are to be recorded. So here we will learn how actually you are recording the transactions. It is possible that we have learned chapter number 2, so many of you may be knowing 2 effects of the transaction, but how to record that 2 effects in a journal, we are going to learn in this chapter. Okay, let us see the characteristics of journal book. From above discussion, the characteristics of journal book are described as follows. Number 1, original book. The very first treatment of accounting transaction is recorded in the journal. Thus, journal is an original book or fundamental book. Dual effect. According to debit credit rule, dual effects are recorded in accounting transaction. As we know, a transaction has minimum 2 effects. Why I am telling minimum? Because it can have 3 effects, but debit and credit effect should be there. 2 columns for amount. As per dual effect, amount of debit and credit column will be different here. Then order of date in journal book, they are recorded daily basis, so it is in the order of date. Narration. After recording a journal entry, a brief transaction is mentioned below the journal entry, which is known as narration. The narration provides information about transaction. Now this is also important thing. Many of you will, while teaching this journal, they will tell that this narration is not required. If you are not writing, then it is okay. It's okay, but it is okay in standard 12th, but not in standard 11th. So if you want full marks for the sums, then what I am telling, that should be followed, and if you are not following, no problem, then marks is based on me. Okay, many of you may tell that this thing is not important and this is not important. Let it go with the flow, but nothing I will accept. If you are studying in accordance to me, then only it will be fine. Okay, yeah. Now, significance. Significance means importance. What is this importance of journal? Number 1, all accounting transactions. Since in journal accounting transactions are recorded in order of time and date, no transactions remain unrecorded. The importance of journal is that every type of transactions are recorded here. None of the accounting economic transactions, non-economic are ignored. None of the economic transactions are ignored. All are recorded here. So this is a basic book. Number 2, detailed information. In journal book, a systematic and detailed information of each transaction is maintained. Thus, when any information is required, can be obtained. We can obtain the information in detail about the transaction that is occurred. Information useful for future. In journal, at the end, a brief information of each transaction is provided. Thus, in future, information pertaining to transactions becomes available. Now, easy for posting. In a journal, 2 separate columns for debit and credit are maintained. Thus, it becomes easy to which account it is debited, to which it is credited. It is easy to understand. Okay. Systematic recording. Since before recording transactions in ledger, transaction in recorded in as per the journal books, as per the rules, transactions are recorded in systematic manner in ledger. Ledger means account. To prepare account of a person, first you need to prepare his journal. What is ledger, we will learn in next chapters. Errorless accounts. In a journal, according to the rules of double entry, 2 effects of transactions are passed. Thus, the possibility of errors is minimized. This is very good thing. Now, a specimen or a format of journal is given. How to record a transaction? See, first, which are the columns? Now, see, if you are learning this account properly, now this is the first chapter only. Still you have to go till part 2 all the chapters and part 1 all the chapters. I am not creating any fear within us, but students don't know which are the columns to be prepared. That if you are solving any sum or if you are recording any transactions, then there are different columns. Now you have to remember that columns. You don't have to by heart, but you have to remember it systematically, that you are preparing journal, so these are the columns required. If you are preparing ledger, if you are preparing any other thing, then these are the columns required. Every year this is the problem of students, that they don't know which are the columns to be prepared. It is the problem because you are by hearting the account. Friends, first lecture itself I said that don't by heart the account. Don't read. Only practice, practice and practice. No reading in accounts, excluding the theory part which I am giving to you. Okay? Now, which are the columns? Date, particulars, in front of it one heading is to be given. Before preparing the journal, one heading is given. Journal book of Sri. The name should be given in the question. Now the columns. Date, particulars, LF number means ledger folio number. Nothing will come, you just draw that column. It is a formality. Debit rupees and credit rupees. Now how to record the transaction? 1st January 2015 they are recorded. Dash account and then space is there and they are writing DR. DR means debit to dash account and then they are not writing credit. 2 is understood. By writing 2 we can understand that 2 means credit and what is written upside is debit. And then being, B-E-I-N-G, being means a narration is recorded starting from B and amount is written. Now they are giving a short explanation. Date. In journal entry, the first column is of date. Accounting transactions is recorded in the order of date and time in journal. In this column, first of all, year, then month, then finally date is mentioned. But if you are directly writing the today's date 9/10/2020, then also it is okay. We will write in this way only. Particulars. The second column in the journal book is of particulars. Particulars is very important column in journal. As per the rules of debit and credit, which account is to be debited and which account is to be credited is there. Example, cash account debit, but instead of debit, DR is written. Then, which account has credit effect is recorded subsequently means afterwards. A credit effect to account is recorded in second line and it is written after keeping some space where the 2 word is written, then the name of account would appear. At the end, the word credit is not written. 2 sales account. See, you can see in the format itself. The debit effect will start directly, but after leaving some space, the credit effect is written. Okay? Yes. Then brief information is written as narration, which is disclosed as being. As an indication of completion of transaction, 2 lines are drawn below the transaction. We have don't draw any line. Ledger folio. In the third column of journal, ledger folio number is disclosed. In short, it is called LF number. After passing of journal entry, during posting of the transaction in ledger, the page number is to be written where respective posting is made. Due to this arrangement, whenever any information is required, it can be easily availed from the concerned. This is just a page number, but we will write nothing in there. Now debit. In the fourth column of journal, the amount of debit amount is to be written and account which is debited. In the column of particulars, the amount is to be written in debit column. And in the fifth column, credit amount is written. Finally, according to double entry system, in each transaction, wherever the amount is debited, the same amount is to be credited. Thus, total of both sides should be identical, means same. Because the debit is equals to credit in accounting. If it is not so, then you have made some mistake. Whatever transactions are recorded in a journal or respective page, after having total, at the end of page, the word balance carried forward is written. Now, sometimes you are preparing a journal. Page is over, but your transaction is not over. Then still you will total them and you will tell that total carried forward. Then in next page you will write total carried brought forward. That thing I will explain, but that thing is actually not required. If you are not doing that thing also, then it is okay. Above total, 1 line is drawn, below the total 2 lines are drawn. Above total 1 line, then below double lines. At the end of page, the word balance carried forward is written. Above total 1 line is to be drawn and below total 2 lines are to be drawn, which indicates the total of journal entries are completed. On the subsequent page, before recording transactions in the beginning of page, again total of debit and credit is written, balance brought forward. That we will not do now. At the end of specific time period when all the transactions are recorded, then the total of debit and credit column is made. In the column of particular, the word total is written. Explanation is given. That is not. Now friends, what we will do? We will write the name of chapter and we will write some of the things. Then we will start the process. Okay. Everyone, write down. Chapter number 4. Journal. Now, after writing this chapter number 4 journal, we are going to write format of a journal entry. Format of specimen of a journal entry. How to write? First we will write the heading. Journal entries in books of Shri dash. Then we will draw the columns, date, particulars, LF number, debit rupees, credit rupees. Then here any date will come. Suppose today's date is 9/10/2020. Then write down today's date, no problem. Book they are telling different way, then also it is okay. Dash account debit. Debit means write only here. Suppose cash account is debit, then you will write cash and account is written A/C. Account debit means here. Then its debit amount is written. Here we will put always dash. Then for writing the credit amount and the credit account which is effected, we will leave this much space and then we will write to dash account. So CR credit is not written, only debit is written. This is showing debit effect and this is showing credit effect with 2 and leaving some space. And the amount is written in credit column. After completion of the transaction, B, a narration is required, short explanation, and then, okay, if suppose only one entry is written and then in such a way we will. Okay friends, so this is the simple format. Write down everyone. After that, again for our remembering, we will write the rules of debit and credit, so that everyone will remember. Let us remember these rules of debit and credit, because this is the first step. If you don't know the rules of debit and credit, then what we will decide that which account is to be debited or which is to be credited. So rules of debit credit. Number 1, personal account. Number 1, personal account, and for personal account, person taking benefit, person giving benefit. The person taking benefit is the receiver and person giving the benefit is giver. Okay, now the rules. Debit the receiver, credit the giver. Number 2, the real account, increasing asset or goods, decreasing asset or goods. So for that, Debit what comes in, credit what goes out. And after that, nominal account occurrence of expenses or losses, occurrence of incomes or gains. Debit the expenses or losses. Credit the incomes or gains. So friends, these are our rules. Please remember, otherwise nothing is there. Okay? If you are not remembering the rules, then everything is in vain. Okay? For personal account, person taking the benefit are receiver, giving the benefit are givers. So debit the receiver, credit the giver. For real account, increasing assets or goods or decreasing assets the goods. What comes in debit, what goes out credit. For nominal account, expense or losses are debited, incomes and gains are credited. Let's start first sum of this chapter. We will try that how we are knowing these things. Okay? Yeah. Let us start a sum. Which is given on page number 102. So everyone come on page number 102, sum number 5. From the following transactions, write journal entries in books of Pranjal. Journal entry in books of Pranjal. So first we will prepare the format. So it is exercise, and in that question number 5. Journal entries in books of Pranjal. Journal entries in books of Pranjal. Date, particulars, LF number, then debit rupees and credit rupees. Now see, this LF number is very narrow. Nothing is coming here. This is just a formality, so keep it very narrow. Okay? And don't worry about the totals if the page are over. We will do total at the end only. The page is over in between, don't worry about that. Okay? Yes. Yes. So we have drawn the format and we are starting. Now number 1. Introduced rupees 10,000 cash and commenced the business. So the owner is starting the business. Commence means starting the business by bringing in cash of rupees 10,000. Now friends, first of all we should remember the two effects. Owner is bringing cash in the business, so cash is coming in. So cash is to be debited. Whereas owner is the giver of that cash. So we cannot credit owner's name. Instead we can credit capital account for that. What owner is bringing in the business, that is to be credited, because owner is the giver of that capital. So we are writing. Now how to write? See, date is not given, instead only simply numbers are given. So we will also write according to the numbers. Number 1, cash account debit. 2, capital account. First of all, you decide which two accounts will affect. Cash is coming in, so cash account debit. Owner is giver of this capital, so to capital account. Now what is the amount? 10,000. On the debit side 10,000. See, where cash is written in the same line 10,000 is there. Where capital is written in the same line 10,000 is there. So here and here nothing will come. And moreover, nothing should be written here. No dash or nothing is to be written. Now a short narration is to be written. Starting from D. Narration means short explanation of the transaction. What is done in this transaction? We are bringing cash and starting the business. So what we are writing being cash brought and started the business. Being cash brought and started the business. Now bracket is closed. Now in book they are telling that after each transaction make a line. It is not required. This thing is perfect. Okay? This thing is perfect. Let me repeat it. Here we are starting the business by bringing the cash. So cash is coming in. Cash account debit. So cash AC account debit is written near this LF. In the same line writing 10,000. Then leaving some space. Then writing 2. Then the credit effect is capital account, but no credit is written. Only in this line of capital account on the credit column 10,000 is written, and after that in the next line a short narration. This is in our words. This is not in the words of book. Okay? So being cash brought and started the business. Number 2. Goods means we are either purchasing or sales. Goods of 5,000 purchased on cash. We are purchasing the goods for cash and no name is written, so it is understood that cash is there. Okay, so now what is the effect? Here goods are coming in, so purchase account is debit. Moreover, we are purchasing the goods on cash, so for purchasing the goods we have to pay the cash, so cash is going. So goods are coming in, so purchase account debit. We have to pay cash for that goods, so cash account debit. So purchase account debit to cash account. After that amount 5,000. In the debit line and cash accounts credit line again 5,000. Now a short explanation. B. Every explanation should start from being what we have done here. We have purchased the goods on cash, so being goods purchased on cash. Friends, one more thing I have to tell you. If in chapter number 2, actually you have understood the two effects of transaction, then this thing would have been easy for you. And if you have not understood the concept and simply you were by hearting that concept, then nothing is there. By looking at the transactions that goods are purchased on cash, goods are purchased, so goods are coming in, purchase account debit. We are paying the cash, cash is going out, cash account credit. Now if you remember purchase and cash, then the thing is here only to write, how to present it. Purchase is debited, so purchase account we are debit. Leaving some space, then 2. Then what is credit? Cash account. Then in debit side this line, then credit side this line, and a short explanation. This chapter is only understood if you are knowing the two effects in chapter number 2. Otherwise this is not easy. Next, goods of 8,000 purchased on credit from Rajan. Again we are purchasing the goods, but now we are not paying the cash. Instead we are only purchasing the goods on credit. We are not paying any cash. But goods are purchased, so goods are coming in, so purchase account should be debited. Now if we are paying the cash, then cash is credited. But we are not paying the cash. Instead Rajan is only giving the effect, only giving the goods to the business. Rajan is the giver. Rajan account credit. Because we have not paid the cash, I have said in chapter number 2 only, goods are purchased, purchase is always debit. Now about the credit side, if cash is paid, then cash account. If check is given, then bank account. If we are purchasing on credit, then opposite person is only the giver, so credit is account. So purchase account debit to Rajan account, amount 8,000. B, here goods were purchased on cash, here goods were purchased on credit. So B, goods purchased on credit, but from whom? From Rajan. So understand one thing very clearly. When the goods are purchased, purchase is debited. Now the thing is about credit side. If you have paid the cash, then cash credit. If you have given the check, then bank credit. If you are not given anything, then name should be credited, because the opposite party is just the giver of the goods, nothing else. Okay. Number 4. Goods of 2,000 given for donation. Now this is the other transactions. We are giving the goods. Goods are going out for other purposes. That is, goods are going by fire, by theft, by rain, by charity, by donation, by personal use. All these are the outward of goods by other reasons. And in that only I have said one thing, that when the goods are moving out for other reasons, excluding sales, because from sales we are getting the amount, we are not getting the amount. So whenever the goods are going outward, always purchase account is credited. So here one thing is decided, purchase should be credited. Now goods are given for what? Should be debited. Goods are given for donation. So we can write donation account debit or charity account debit. Any name you can write. Okay? Yes. Number 4. Donation or charity. Any word you can write, it is not a problem. Or you write both. Account debit to purchase account 2,000. So what we have done in this transaction, we have given the goods for donation. B, goods given for donation. Again I will repeat, when the goods are going out for other reasons excluding sales, always purchase account is debited. And what is debited? Accordingly what we have done, we have given as donation or charity, so donation or charity account debit. If we are given as free samples, so advertisement expense account debit or free samples account debit. So we have to decide in such a way. Next, given order to Shivani for dispatch of goods of rupees 3,000. Directly don't decide that it is a non-economic transaction. First understand the things what is there. We are giving the order to Shivani for just dispatch, means for giving us the goods. So what we have to do, actually we have to purchase from Shivani, but just we have given the order. Neither Shivani is giving the goods to us, neither we are giving cash to us. So our cash is also not going out, our goods is also not coming in. Nothing is happening in this transaction, so it is a non-economic transactions. Because only order is given, no other thing is done. So directly you will write non economic transaction. Now it is possible that in your notebook page is completed till here. Then in the book they are telling that to take the total here and carry the total on the next page. No, we are not doing that thing. Okay, it is as per the rules, but it is not required, because my page will not be completed and your page will be completed. So have I to come to each and every house to check whether your page is completed or not? If we are in the school, then I can decide, but we are not in the school. So just after completing all the transaction, we will take the total at that time. Otherwise, if the page is over or not over, we will not take the total. But remember one thing: if one line is there and next line you are writing two purchases in the next page, this is not proper. Write the whole transaction in one page only. If being you are writing in next page, then also it is not okay. Write everything in one page, the whole fourth transaction in one page. If you are not having space, write in next page. But don't worry about the totals. So in non-economic transaction, dash dash. Now number 6. Shivani has dispatched means sent the goods as per the order. So Shivani is sending the goods. We are receiving the goods. So we are receiving, so we are purchasing the goods from Shivani. So purchase account debit. Now in the 5th transaction, amount is written 3000, but have we paid the cash? We have not paid any cash. Only Shivani is sending us the goods. So Shivani is the giver and we are receiving the goods. So purchase account debit and Shivani is credit. So purchase account debit to Shivani account. And the amount you can see from the previous transaction, that is 3000. B. Goods dispatched by Shivani as per order. Being goods dispatched by Shivani means Shivani is sending the goods to us as per the order. And the last transaction, paid 2500 for life insurance premium. Paid means we have already paid, so cash has gone out, so cash should be credited. Now on the debit side, the name should be written. What we have paid? Life insurance premium. But one more thing, friends. Simply it is written insurance premium, then we can write insurance premium in account. But life insurance premium, when you are seeing this word life, then it is personal, because it is based on person's life. So whenever you are seeing simply insurance premium, you can write insurance premium. But whenever you are seeing life insurance premium, then you have to write not life insurance premium, but instead you will write drawings. Because it is for personal use. That life insurance is for personal use. So instead of insurance premium, it is expense, we all know. But this is the expense of personal. This is not related to business. This is on the life of a person, not related to business. So it will be written as drawings account debit. And we have paid, so cash account is credit. And in the narration we can mention that we have paid life insurance premium. Okay? So remember this thing. So instead of life insurance, what we will write? Drawings account debit. Because this life insurance is not related to business, it is based on a life of a person. So drawings account debit. And it is paid, the things which are paid, always cash is credited, cash account 2500. 2500. B. Life insurance premium paid. So these simple things you have to remember, my friends. So as it is given in the book, here one line and here it should be 2 lines. So it shows that after this nothing will come. Again I will repeat once more, my friends, please listen my words. In the book it is given life insurance premium is paid. Paid means cash has gone out, cash will be credited. But the thing is that always in the hurry we are writing life insurance premium account debit. No, life insurance premium, if simply insurance premium is given then it is okay. But life insurance premium is related to life of a person, that is personal, not related to business. So instead drawing account is to be debited. Now we will take the total. 10,000, 5,000, 8,000, 2,000, 3,000, 2,500. On the debit side it is 30,500. Let us see for credit side. 10,000, 5,000, 8,000, 2,000, 3,000, 2,500. 30,500. And one more we will write after the sum. Life insurance premium is based on life of a person which is not related to business, thus it is treated as drawings. And drawings means you all know it is for personal. So in this way you have to write the journal entries. Okay? Yes, we will once discuss each and every entry so that it will be easy for you. Reading the question again. Introduce 10,000 cash and commence the business. We are introducing cash means we are bringing the cash and starting the business. So cash is coming in the business, cash account is to be debited. Owner is the giver of that capital, so we cannot write owner's name, but instead we can write capital. So cash debit to capital account. Goods of 5,000 purchased on cash. We are purchasing the goods. Goods are coming in, so purchase should be debited. Moreover, we are paying the cash, so cash is going out, cash account ready. So purchase debit to cash account. Again we are purchasing the goods on credit from Rajan. Now here again we are purchasing the goods, so purchase should be debited because goods are coming in. But we are not paying any cash, Rajan is just giving the goods, so Rajan is the giver, so purchase debit to Rajan account. If you have paid then cash account, if you have not paid then parties account. Goods of 2,000 given for donation. These are outward of goods. When there is outward of goods, always purchase is credited and debit side it should be what we have done. We have given the goods as donation. So donation or charity account debit to purchase account. Given order to Shivani for dispatch of goods. We are just giving order. None of the cash has moved or the goods have coming in, so it is a non-economic transaction. Now Shivani has dispatched the goods as per the order, means she is sending the goods, we are receiving the goods. So goods are coming in, purchase account debit. Moreover, no cash is paid, only Shivani is the giver, so purchase account debit to Shivani account. Paid 2,500 for life insurance premium. Now life insurance premium is based on life of person which is not related to business. So it is personal, so drawing should be debited, and as it is paid, cash is credited. Taking the total and write this note, okay, so you can understand the things properly. So friends, that's all for today. Thank you so much.